the 10 years from 2025 to 2035. There's going to be a lot of different business models, a lot of different products created, and a lot of different companies launched, and a lot of money made, and there'll be a lot of mistakes made, and there'll be a lot of fortunes created. And this is what the chaos of the marketplace.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge.
Michael Saylor explores the future of stocks and bonds powered by Bitcoin, covering opportunities, risks, and breakthroughs. Stay tuned. Let's dive.
I think there's a natural ebb and flow in the economy and in the community. And so Bitcoin surges up and has periods of extraordinary excitement, generates a lot of adrenaline and enthusiasm. Then there's a celebration, and then people extrapolate straight line to the moon. And then it retraces a bit and consolidates. And then people think, well, it's going to bounce back really fast. And if it chops sideways for a while, there's always a natural human tendency to get frustrated. I don't think we have anything to be unhappy about. The truth is, if you zoom out and look at the 1-year chart, Bitcoin is like up 99%.
Mm-hmm.
It's like nearly double. So if you walked in to anybody in the street and said, hey, I'm heavily invested in an asset that is growing up 100% a year, should I be happy or not? They would say, you should be happy, right? It's just that the way that it gets there tends to be a bit volatile. As for why, I think the why Bitcoin has been consolidating, building its support in the teens right now, is because you've got $2.3 trillion of Bitcoin that is unbanked. And so you've got a lot of people that own a lot of Bitcoin, but they can't get a loan against it. And because they can't get a loan against it, the only, at the point that you all of a sudden find yourself Bitcoin rich, but fiat poor, you don't have a lot of dollars, but you have a lot of Bitcoin, and you can't borrow against it, then you think, I have to go sell it. So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling the stock? Is that a vote of not confidence, in the company? And the answer is no. It's just they have kids to go to college. They want to buy a house, right? They want to live comfortably. They want to do something for their parents. And so right now, I think that the selling is crypto OGs that have had a lot of money for a long time. They're selling 5%, diversifying. They're doing something like that. And the market is absorbing all of that energy, building its support. The volatility is coming out of the asset. That's a really good sign. But because what you want for the asset to mature is for lots of long-term capital holders, the big corporations, the big institutions to buy. You want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some, or as much as they need to, so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institutions are going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But this is just a growing stage or, natural for the life cycle of an asset that's monetizing like this.
Michael Saylor says Bitcoin is entering a new phase where lower volatility could reshape its audience. For years, Bitcoin's wild price swings attracted retail traders chasing quick gains and adrenaline-fueled action. Now, as the asset steadies, institutions find it more appealing. Large funds, treasuries, and regulated products prefer stability because it allows them to scale without the constant threat of dramatic crashes. According to Saylor, this shift marks a turning point where Bitcoin matures into a safer long-term asset even if it feels less thrilling in the short run. Saylor calls it a conundrum. On one hand, lower volatility is a green light for mega institutions to enter, bringing billions in new capital. On the other, the calm waters may bore retail traders who thrive on rapid price moves. At the moment, Bitcoin is up more than 80% over the past year, with public treasuries holding nearly $118 billion worth. The excitement may fade for some, but Saylor believes this is simply the growing stage of Bitcoin's life cycle.
And that breaks down when, for example, your entire currency collapses. For example, if you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows. Well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. When the people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and derive it. So I think the great irony is, again, the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
Bitcoin exchange outflows have surged by a staggering 347%, sparking questions about whether prices are gearing up for another rally. Large investors and whales are driving these movements, pulling more than 18,000 BTC from trading platforms and moving them into long-term storage. This kind of accumulation typically reduces available supply on exchanges, tightening liquidity and creating conditions that can support upward price momentum. When coins are withdrawn at this scale, it often signals that holders are preparing for the long haul rather than looking to sell into the market. On-chain activity continues to reinforce this bullish backdrop. The network value to transaction ratio, currently at 27.40, shows only a slight decline, suggesting that Bitcoin's market cap is still well supported by healthy transaction activity. This resilience highlights strong utility and investor confidence, even as volatility shakes short-term traders. At the same time, shorts are being punished, with nearly $929,000 in liquidations compared to just $234,000 for longs. Forced buybacks during these squeezes often accelerate upward moves. With whales accumulating, liquidity shrinking, and shorts capitulating, momentum is tilting toward a bullish breakout as institutions and long-term holders set the tone. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.